Hey guys, I just wanted to share this article with you that I was on a podcast or listening to a podcast the other day, and they mentioned this article on Time Magazine about the 8 alternative investments for 2024, and mortgage notes, was one of them, and it was just really neat being able to hear that it's I already know that it I love investing in mortgage notes, right? And I love it so much that I actually pivoted and no longer invest in single family homes. So I sold my last Section 8 rental. What was it, this past July? Or I'm sorry, last July 2023. And so and I've been, even before that, I've been pivoting, switching everything over into these mortgage notes. And and I'll just kind of just read through them. 8 popular alternative investments, and I'll link I'll take the link and I'll put it in the description. I'll actually pin it in the comments section as well, so that way, if you get time, you want to read it, please feel free. One, obviously, is real estate, right? And you have these REITs, these real estate investment trust. I don't really do anything with those. Like I said, I was heavily investing in residential and commercial rental property. I've done land, but single family homes was pretty much the the bread and butter. I've done commercial properties, 30 plus units, and things like that years ago. But like I said, I was primarily doing the single family residence, and then once I really fully understood mortgage notes and the leverage and the power of them, I just totally switched everything over to that. Then another one is fine arts and collectibles, gold and precious metals. I do buy gold and silver. Commodities, I don't do anything in commodities. Lending, I'll come back to this one. Cryptocurrency, don't do anything with cryptocurrency. I'm not a big fan of that. Crowdfunding, I don't do anything with crowdfunding or even private equity. I'll come back to lending. So I'll just read this little snippet here. Investing in debt is a way for investors to buy streams of payments over time and then receive the face value of the loan upon its due date. There are several forms of debt investing, included peer-to-peer lending. Basically, that's all that is just you lending, say, a relative money, and then you just getting a return on that. That's obviously if you charge your family member a percentage. But there are websites out there that offer this. I'm not a big fan of this, just because it's unsecured. So if they stop paying, I just, like I said, I'm not a big fan of that. The second bullet point is mortgage debt. This is another lending option for investors. It might involve buying mortgage loans that are in default. These loans are typically bought at a discount if enough of the borrowers pay a sufficient portion of their loans back. The difference is profit for the investor. Another route is funding a new mortgage to borrowers. Now, a couple things with the mortgage debt. I just not only buy non-performing notes. This is non-performing notes is what they're referring to, and you can get a steep discount. With that, you have to work with the borrower. My end goal, I always tell people, I rehab the borrower and not rehab the property. So my end goal is to work with the borrower, get them back on track, do a loan modification, and collecting those payments again. Foreclosure is the very last thing that I do on these non-performing notes. Another thing that you could do is you could buy performing notes, and the market that we're in right now, I think if I remember correctly, I think it's like a 90s. I think it's a 3% default rate right now. So it's a really, this market is a performing market, meaning you should be investing in mortgage notes. Honestly, you should be investing, if you are going to go down the mortgage route, and if you are going to invest in this, you should be investing in both. You should be doing non-performing notes and performing notes. That's what I do. Half of my portfolio is non-performing and the other half is performing. But if you're new to the game, do not start off investing in non-performing notes, because it is, you have to know about the note industry. You have to know about the different exit strategies, and like the laws and what you need to do if you go in that, if you are forced to go down that road, having to do a foreclosure. So if you're new to the game, I would not recommend initially starting out in a non-performing area. The performing area is where you need to start off at, and with the performing area, you can buy different notes like default deeds of trust, mortgages, and contract for deeds. And what I would suggest, either picking a deed of trust or a mortgage. Do not do contract for deeds, just because they are, the title is still, the ownership is still in your company name, right? So all, things happen, your company is still tied to that asset, where the mortgage and the deeds of trust, the title is the homeowner. So in all in all instances, you're strictly the bank, but each of them has its pros and cons. And like I was just saying, I was just initially start off with performing note, and I just thought this article was extremely interesting. That the first time that I've seen Time magazine, it's that they mentioned mortgage debt. This is another lending option for investors and might involve buying mortgage loans that are in default and or performing notes. Anyway, I just wanted to share this. I thought it was very interesting. Like I said, I'll link the article in the descriptions or in the comments section. Let me know your thoughts. If you have bought performing and or non-performing notes, let me know. Or if you're just looking to get started in it, let me know that too, and I could point you in the right direction and on some resources and things like that. So check this article out. I thought it was very interesting. All right, see ya.